Okay, let's unpack this because today we're diving deep into a company that, well, it absolutely embodies the high-stakes roller coaster nature of frontier technology. Rigetti Computing, ticker RGTI. If you follow this stock, you know exactly what we mean. We're talking about a wild 52-week range. It swung from just, what, $0.66 all the way up to over $21.
Yeah, incredible swings.
And then that sudden, sharp 45% plunge back in January 2025.
Right after those NVIDIA comments.
Exactly. Contrast that with a more recent rally and a huge cash infusion. It just screams volatility, speculation.
Definitely.
And this deep dive is special. It's based entirely on the stack of source materials you, the listener, share with us for analysis.
That's right.
So our mission today is to go through those sources, pull out the most important nuggets of knowledge, the key insights, and really help you understand what's driving Rigetti Computing as of, well, early June 2025.
And we'll cover the key areas, the business itself, the tech, the management team, their financials, which are quite something.
Yeah.
How the market views them, who owns the stock, and of course the big risks you need to consider.
Absolutely. Before we jump in, if you find this kind of analysis helpful, getting the core insights distilled directly from the info you provide, please take a second, like this deep dive, subscribe to the Stock Analytics AI YouTube channel.
It really helps us keep these going.
It does. And remember, for just Euro $4.99 a month, members get their ticker requests prioritized for deep dives like this one, plus you get in-depth earnings call analysis. It's all designed to help you cut through the noise faster. Stick around to the end and we'll connect all these pieces back to that initial hook. Why is this stock just so incredibly volatile?
Good plan.
All right, let's start with the basics. What exactly is Rigetti Computing and how do they plan to make money?
So based on the sources, Rigetti positions itself as a pioneer in full-stack quantum computing.
Full stack, okay. Meaning?
Meaning they handle pretty much everything, from designing and actually manufacturing their own superconducting quantum processors right through to operating them. They offer access in a couple of ways. Cloud access, that's been around since 2017 through Rigetti Quantum Cloud Services, or QCAs. Got it. And since 2021, they've also started selling actual on-premises systems directly to clients.
Okay, so cloud or by the hardware.
Right. But here's a really key point from the sources about their current revenue. As of early 2025, a substantial slice of their income comes from development contracts.
R&D money.
Exactly. Often with government agencies or research groups. This makes their revenue stream, well, kind of unpredictable, lumpy, you could say, and vulnerable.
Vulnerable how?
Well, we saw this play out in Q1 2025. Revenue dropped quite a bit, and the sources say part of that was due to delays in the U.S. National Quantum Initiative Act getting reauthorized.
The government funding tap got slowed down.
Precisely. So the long-term goal definitely is to make a big shift away from that, towards more commercial system sales and building up that recurring QCS revenue.
Okay, so they build these incredibly complex machines, offer access, but rely heavily on R&D funding right now. What are the specific products or services? What's in the portfolio?
Yeah, it's kind of a tiered portfolio aimed at different market segments. You've got the QCAS for remote cloud access.
Right.
For clients who want their own hardware, they sell those on-premises systems. The sources mentioned their 84-qubit Anka 3 system as a recent example.
84 qubits, okay.
They also have something called the Novera QPU. It's a smaller 9-qubit unit, really designed for the R&D community to, integrate into their own experiments, their own setups.
A research tool mainly.
Seems like it. And beyond just the quantum hardware itself, they really emphasize their proprietary quantum classical infrastructure.
Why is that important?
Well, it's crucial because many experts believe real-world quantum applications will need a hybrid approach using both quantum and classical computers working together seamlessly.
Makes sense.
And for scaling up, building bigger machines, they're focused on their patented multi-chip quantum processor technology. Their roadmap aims pretty high. A 36-qubit system supposedly by mid-2025, and then systems with over 100 qubits by the end of 2025.
Using that multi-chip approach.
That seems to be the plan, leveraging that specific tech.
That multi-chip tech sounds like a key differentiator. How does all this position them in the broader market, and what's their actual scale right now?
Well, Rigetti definitely positions itself as a pioneer. A key asset they always highlight is their Fab 1 facility.
Fab 1.
Yeah, they call it the industry's first dedicated and integrated quantum device manufacturing facility. That vertical integration, making their own chips, is presented as a significant advantage. Control over the process.
And size-wise?
In terms of market scale, as of early June 2025, their market cap puts them firmly in the mid-cap range, somewhere between, say, $3.3 billion and $3.44 billion.
$3.3 billion.
Okay.
And here's where the sources really highlight that striking paradox we mentioned earlier.
Right.
That multi-billion-dollar market cap stands in stark contrast to their current operational scale. Their Q1 2025 revenue, for instance, just $1.5 million.
$1.5 million. Wow.
Yeah, this is absolutely not a company valued on today's sales or profits. The market valuation is based purely, it seems, on the potential for future growth, future breakthroughs.
It's a bet on the future, plain and simple.
Completely. It's a valuation built entirely on betting on a transformative future that hasn't arrived yet.
So a $3.3 billion valuation on $1.5 million quarterly revenue, that really puts the potential versus reality into sharp focus. What's the fundamental problem they're trying to solve with all this high-tech stuff? Their core value proposition, as the sources lay it out, is basically to build the world's most powerful quantum computers. Computers capable of solving problems that are currently just intractable, impossible for even the best classical supercomputers today.
Like what kind of problems?
We're talking about tackling massive challenges, things like climate modeling, fusion energy research, drug discovery, designing new materials, complex financial optimization, really big, hairy problems.
Okay, and their unique angle.
Their key differentiators, according to them, are that patented multi-chip architecture for scalability, their hybrid quantum classical approach, combined with that full-stack model design, build, operate, which they believe gives them better control and efficiency. But the sources are very clear. The ultimate credibility, the proof in the pudding, really hinges on them showing tangible, consistent progress towards achieving fault tolerance in their quantum computers.
Fault tolerance.
Yeah.
Can you quickly break that down? Why is it such a big deal?
Sure. Basically, achieving fault tolerance means building quantum computers that can automatically correct their own errors as they compute. Quantum bits, qubits, are incredibly fragile.
Right. Sensitive to noise.
Extremely. They get easily disrupted by noise from the environment. Without good error correction, computations can only run for very, very short times before errors pile up, and the answer becomes, well, meaningless.
You need fault tolerance for complex problems.
Exactly. It's essential for running the long, complex quantum algorithms needed to solve those really hard, currently impossible problems we talked about. It's a major, major engineering and physics challenge for the whole field.
Got it. So building these things requires overcoming huge technical hurdles, massive capital investment. How tough would it be for someone else to just, show up and copy Rigetti's whole approach?
Well, the sources list several pretty significant barriers to entry that make it hard to replicate quickly. First off, there's a proprietary intellectual property, the IP. Right. There are multi-chip architecture design, specialized fabrication techniques. They mention something called ABAA, which sounds like complex manufacturing steps needed for these delicate quantum chips.
Okay, so unique tech. What else?
Then there's Fab 1 itself. Building and operating a dedicated, integrated quantum manufacturing facility like that is, well, immensely capital intensive. You need highly specialized clean room environments, unique equipment.
And the expertise.
And deep, unique expertise. Plus, you need that multidisciplinary, full-stack know-how across physics, engineering, software, cryogenics. Finding and integrating all that talent is really hard.
Sounds expensive and difficult.
Very. Add to that the overall extreme capital intensity of the entire quantum computing industry, plus the scarcity of truly specialized talent, and yeah, it creates a significant moat or barrier around what Rigetti is trying to do.
So unique tech, tough to copy infrastructure. Let's switch gears and look at the people running the show. What do the sources tell us about Rigetti's management team?
Okay, leadership. The team is headed by Dr. Subodh Kulkarni. He took over as CEO back in December 2022.
Kulkarni, his background.
His background is highlighted as highly relevant. He's got over 30 years in the semiconductor industry, a track record of scaling operations, commercializing technology in public companies. Notably, he led a company called Cyber Optics through to a successful acquisition. That suggests experience with growth and maybe even exit strategies.
Interesting. Anyone else notable?
Well, it's mentioned that Rigetti's chief financial officer, Jeffrey Bertelsen, also came over from Cyber Optics.
Ah, so they worked together before.
Yeah, indicating perhaps an existing working dynamic there at the top. Other key team members mentioned include the CTO and senior VPs overseeing critical areas like quantum systems and HR.
So Kulkarni's mix of tech and business experience seems key.
Exactly. That blend of deep technical understanding from semiconductors and proven business leadership is seen as particularly important right now, as Rigetti tries to make that really difficult transition from being primarily an R&D outfit to achieving real commercial success.
How have they handled challenges? And how open have they been with investors, transparency-wise?
Well, Rigetti has a stated code of business conduct, emphasizing ethics and integrity. They communicate through the standard public company channels, earnings calls, SEC filings, press releases.
Standard bills?
Standard stuff. However, the sources definitely introduce some notable challenges here that test that commitment to transparency.
Like what?
Remember that big stock drop after the NVIDIA CEO's comments in early 2025? The one suggesting useful quantum was still decades away.
Yeah, the 45% plunge.
Right. Well, following that, the Rosen law firm announced it was investigating Rigetti, alleging that the company might have issued materially misleading business information.
Oof. An investigation.
Yeah. Now, it's important to stress this is an allegation, an investigation, not a finding of guilt. But that investigation, coupled with Rigetti's own past disclosures about having material weaknesses in their internal controls over financial reporting.
Material weaknesses.
Yeah.
That sounds serious.
It means there's a significant deficiency in their internal processes, something that could potentially lead to important errors in their financial reporting going undetected.
Yeah.
So yeah, those two things together definitely raise questions for investors about transparency and the reliability of their internal processes.
Okay, that's definitely something investors need to be aware of. How about their actions? Do they seem shareholder-oriented, especially in how they've handled money and raised capital?
Management's actions certainly show a very strong focus on securing the capital they need to fund those ambitious plans. The recent large equity raises, especially that huge $350 million at the market or ATM offering they just completed in June 2025.
That's a lot of money.
It is. And it's explicitly aimed at funding their technology roadmap. An ATM offering basically lets a company sell shares directly into the market over time, often trying to time it with stock price movements.
Okay.
They also prepaid their existing debt back in late 2024. That de-risked the balance sheet, which is generally seen as a positive move for shareholders, reducing financial leverage.
So getting cash, cutting debt, sounds good.
Well, yes, but you have to look at the other side of the coin. These big equity raises cause significant shareholder dilution.
Meaning existing shares become a smaller piece of the pie.
Exactly. So while the intent is clearly to provide that crucial runway to create future value, the actual effectiveness for shareholders hinges entirely on whether management successfully uses this massive pile of new capital to achieve those critical breakthroughs and drive the commercial success needed to justify that dilution.
Right, the execution risk. Speaking of that capital, let's dig into the numbers themselves. What does the financial health picture actually look like for Rigetti, based on these sources?
Okay, the key metrics from early June 2025 and recent reports. They paint a very clear picture. This is a company still deep in the development phase.
Okay.
You've got that mid-cap market value. We said $3.3 to $3.44 billion. Their price-to-earnings ratio, negative, around negative 23.51, simply because they aren't making any profit.
No earnings in the PE.
None. And revenue trends have been, well, challenging. Q1 2025 revenue was down significantly, 52% year over year, landing at just $1.5 million.
Only $1.5 million.
And full year 2024 revenue was also down compared to 2023. They have substantial operating losses. It was $21.6 million lost just in Q1 2025.
Over $21 million lost on $1.5 million revenue.
Yeah. Now, you might see the reported net income of $42.6 million in Q1 2025 and think, hey, profit.
Right. What's that about?
But the sources clarify that was almost entirely due to non-cash gains, about $62.1 million worth from accounting adjustments, things related to warrants and liabilities. It had basically nothing to do with their core business operations actually making money.
Accounting quirks, not profit from selling things.
Exactly. The actual net loss for the full year 2024 was over $200 million. Consistent losses, negative free cash flow.
Okay, so consistent losses, burning cash. What about debt and their cash position, especially after that huge equity raise?
Right. This is where that recent financing has had a major and positive impact on the balance sheet. The sources explicitly state that as of June 11, 2025, right after completing that latest offering, Rigetti reported having a no debt.
Zero debt. Okay.
They prepaid earlier obligations, removing that particular financial risk. And thanks to those substantial equity raises, especially the recent $350 million one, they now have a very strong cash and investments position. The figure reported was approximately $575 million as of June 11, 2025.
Over $500 million in cash. That's a serious runway.
It absolutely provides them with a crucial runway. But, and this is vital to remember, this cash cushion comes from raising external capital through dilution, not from profits. They are still burning through cash funding operations and R&D. Free cash flow is negative.
Okay, so given those financials' tiny revenue, big losses, their valuation metrics must look pretty stretched.
Extremely high. Off the charts, really. The price-to-book ratio is elevated, maybe around 15.61, but the price-to-sales ratio, astronomical.
How bad is it?
Based on their FY 2024 revenue and that $3.3 billion plus market cap, it's roughly 319 times sales.
3 NTNX.
And if you dare to annualize the Q1 2025 revenue run rate, that price-to-sales multiple jumps even higher, closer to 573 times.
Wow.
As the sources really hammer home, these multiples scream future potential. It's a clear signal the stock's valuation is based almost entirely on hope and expectation, completely disconnected from current financial performance. The market is placing this massive bet on revenue streams and profitability that simply don't exist today.
That kind of valuation, based purely on potential, must lead to some pretty wild market sentiment swings.
Right.
What's the general view out there on RGTI?
Oh, incredibly polarized and volatile. Which brings us right back to that crazy stock chart we talked about at the start.
Yeah, the roller coaster.
The sources highlight those extreme price swings, the high volatility metrics like a beta of 2.37.
Meaning it moves a lot more than the market.
Way more. A beta over 1 means more volatile than the market. 2.37 suggests it tends to move, on average, more than twice as much. That's a classic sign of speculation being a major driver. Technical indicators might look bullish during rallies, sure, but then events like that January 2025 nosedive after the NVIDIA comments show just how sensitive the stock is. Sensitive to company news, but also just broader industry sentiment.
So a real battleground stock.
Definitely. The sources lay out a very clear bulls versus bears narrative. The bulls, they see value in that recently strengthened balance sheet, the runway it provides. They point to the growing potential demand for quantum hardware, the significant investment flowing into the whole quantum sector globally.
Okay, that's the bull case. The bear.
The bears worry deeply about the high operating expenses versus minimal sales, the consistent revenue misses, the uncertainty of funding beyond this current cash pile if the tech progress stalls.
Right. What happens when this cash runs low?
Exactly. They worry about slow commercial adoption, potential supply chain issues. It's a stock where the story, the narrative, the future expectations, that's everything right now.
How are the professional analysts viewing Rigetti amidst all this?
Well, the analyst price targets really reflect that division and uncertainty. While some sources might indicate a consensus leaning towards strong buy, the actual price targets provided vary quite a bit.
What's the range look like?
Roughly from a $10.17 consensus average up to the $14-16 range as of early June 2025. But it's interesting.
Yeah.
It's interesting to note how these targets have been revised upwards quite dramatically from much lower levels seen back in 2023 and 2024 as the stock price rallied.
So analysts are chasing the price, maybe.
It shows analysts reacting to market momentum and, importantly, that new financing extending the runway. But the lack of tight agreement on where the price should be just underscores the different assumptions they're making about Rigetti's execution ability, the timeline for useful quantum. The sources implicitly suggest taking these targets with a grain of salt given the huge uncertainties.
Makes sense. What specific recent news has really moved the needle for the stock price?
The recent news flow has been a really significant mix, and the market has reacted strongly, especially it seems, to the positive financing news.
Okay, the positives first.
On the positive side, completing that huge $350 million 18th equity offering was a game changer for the balance sheet. Boosted cash to $575 million, made them debt-free. That was big.
Definitely provides breathing room.
Huge breathing room. Then there's a $35 million investment and strategic partnership announced with Quanta Computer. That's seen positively, too. It's not just funding, it's strategic validation from a major global manufacturer.
Okay, validation helps.
And they've also announced wins on government contracts from places like DARPA, AFOSR, Innovate UK. These provide not just funding, but also technical validation from credible defense and research agencies.
All right, so funding, partnership, contract wins. What about the less positive news?
On the more mixed or negative side, that Q1 2025 earnings report showed a miss on expected revenue. Remember, $1.05 that's actual versus a $2.87
How
forecast.
big miss?
And declining gross margins operationally, even though the headline net income looked good because of those non-cash accounting gains. And, of course, lingering in the background is the impact of that earlier NVIDIA CEO comment that caused the big price drop.
So the market seems to be focused on the money right now.
Lately, yeah. The market's recent focus really seems to have been on prioritizing the positive news about funding and strategic partnerships, seeing it as extending the company's life, its runway. But the sources strongly imply this positive momentum needs to be backed up by continued tangible technical progress to be sustainable.
Okay, let's shift to who actually owns Rigetti stock. What does the ownership structure tell us?
Institutional ownership is quite significant, and it's actually been increasing. The sources report hundreds of institutional owners think mutual funds, pension funds, hedge funds holding over 36% of the shares available to trade, the float.
Any big names?
Yeah, we're talking about very large asset managers having stakes. Names like BlackRock, Vanguard, State Street are mentioned.
The usual suspects.
They're
The
there.
trends there.
Well, a trend highlighted in the Q1 2025 filings is that many institutions increased their positions quite substantially during that period. State Street, for example, upped theirs by over 82%. Morgan Stanley by over 123%. One firm, Unicom Systems, reportedly increased theirs by a massive Qualthof's 135%.
Wow, so some big players were buying heavily in Q1.
It suggests growing conviction among some professional investors about Rigetti's potential, at least during that specific window. Though, as always, others did trim or sell their positions, too. It's never uniform.
What about insiders? The management team, the directors, are they buying or selling?
Recent insider activity mentioned primarily involves directors. We saw one director, Helene Gale Sanford, selling shares worth over $500,000 in early June.
Selling. Is that a bad sign?
Well, the sources note the sale was conducted under a prearranged 10b5-1 trading plan. That means the sale was scheduled in advance, often for personal financial planning, diversification, taxes, things like that. So it's not necessarily a signal of lack of confidence, but investors always watch insider sales carefully, regardless of the reason.
Any other insider activity?
There have also been routine grants of restricted stock units, RSUs, which are just a common form of stock-based compensation for directors and executives. And some SEC Form 144 filings also popped up, indicating intentions to potentially sell by some executives, though filing that form doesn't guarantee a sale actually happens.
So mostly planned sales and compensation grants. No big insider buys recently.
Not highlighted in the sources we reviewed for this period, no.
Okay. Is the ownership structure highly concentrated? And what does that imply for corporate governance?
Ownership doesn't seem overly concentrated outside of those large institutional blocks, which is pretty standard for a public company this size. It doesn't look like any single individual or entity has outright controlling interest based on the materials provided.
Standard setup then.
Yeah, Rigetti has a standard corporate governance framework, a board of directors, management structure, a code of business conduct outlining expected behavior.
But are there governance points to watch?
Yes, the sources do highlight a few governance points worth keeping an eye on. Those past disclosures of material weaknesses in internal financial controls, that points to operational challenges that definitely have governance implications. It could potentially impact the accuracy and reliability of their reporting, which the board oversees.
And the investigation.
And that ongoing securities investigation alleging misleading information, that directly relates to the board's oversight responsibility. How accurate are public disclosures? Are they fulfilling their fiduciary duty to shareholders? These are key governance questions raised by that situation. And also, shareholder dilution from all these equity raises is itself a governance factor. It requires strong board oversight to ensure that the capital raised is being deployed effectively enough to actually justify diluting existing shareholders.
Right, making sure the money is well spent. Let's talk specifically about risks now. Beyond the general challenges of being an early-stage deep tech company, what are the specific risks Rigetti faces? The sources mentioned a SWOT analysis.
Right, the SWOT analysis gives a good snapshot. Strengths, they've got that full-stack approach, including FAT1, proprietary IP like the multi-chip tech and their ABAA fabrication methods, and now strong cash position, which is huge. Leadership with relevant semiconductor experience. And those existing government partnerships providing funding and validation.
Okay, those are the positives. Weaknesses.
Weaknesses. Declining and volatile revenue, as we discussed, consistent large operating losses, and significant cash burn. A fundamental dependence on achieving highly uncertain future tech breakthroughs, like fault tolerance. That history of internal control issues, very small current commercial scale, and of course, ongoing shareholder dilution from raising all that capital.
Lots of challenges there. Opportunities.
Opportunities. They're playing in a potentially huge and growing quantum computing market. There's continued government and private investment pouring into the sector globally. Strategic partnerships, like the new one with Quanta, could open doors. The sheer potential to solve those currently intractable problems is massive. And the general industry trend is slowly moving towards more commercial engagement.
And finally, the threats.
Threats. Intense competition is a big one. You've got giants like Google and IBM, plus other specialized quantum companies like IonQ, D-Wave, and many others. There's the risk that Rigetti's specific technological approach could be surpassed or become obsolete. Significant execution risk on delivering their complex roadmap. Their ongoing reliance on capital markets for potential future funding if this cash runs out before profitability.
More threats.
Yeah. Also, regulatory and geopolitical factors could impact their operations or access to markets. Market sentiment itself is a threat, those wild swings and potential short seller pressure. And, of course, the litigation risk from that ongoing securities investigation.
That's what really lays out the push and pull. The sources also specifically called out potential risks from U.S.-imposed tariffs expected in 2025. How might that hit a company like Rigetti?
Yeah, that's an interesting specific point, especially given they're a hardware-intensive business building physical machines. The sources suggest new or expanded tariffs could directly increase their costs for components and materials.
What kind of components?
Things like electronics components, specialized cryogenic parts needed to cool the quantum processors down to near absolute zero, maybe specific materials mentioned in tariff lists. Depends on the specifics, but it hits their cost of goods sold and potentially capital expenditures for Fab 1 or building new systems.
So higher costs. Anything else?
It could also create supply chain disruptions, make sourcing parts more complex or uncertain. This could potentially strain their R&D budgets if key equipment becomes more expensive or harder to get. And then there's the potential for retaliatory tariffs from other countries, which could impact any future international sales or expansion plans. Plus, broadly, tariffs can just contribute to economic uncertainty, which might dampen investment appetite from potential clients or even government funding agencies. It's flagged as a concrete business challenge for a company that actually makes complex hardware.
Okay, that covers a lot of ground. The tech, the money, the team, the risks, ownership. Let's try to bring it all together. Based on everything in these sources, what's the overall picture of Rigetti Computing right now?
Based purely on the sources you provided, Rigetti Computing comes across undeniably as a high-risk, potentially high-reward venture. They're operating right at the absolute frontier of technology.
High risk, high reward.
Exactly. They possess some unique and potentially powerful assets that full-stack control with Fab 1, their proprietary IP. And crucially, they've recently secured a very strong capital position through financing. That provides a vital foundation, a runway. But they face enormous, undeniable challenges. Consistent, significant losses. Massive technological hurdles still ahead to reach truly useful, fault-tolerant quantum computing. Intense competition from extremely well-funded players. That wild stock market volatility driven by speculation. And that pending litigation just adds another layer of uncertainty.
So investing in Rigetti today is essentially a long-term bet on something that hasn't fully materialized yet.
Precisely. The sources frame it very clearly. Investing in Rigetti right now is basically a long-term wager. A bet on their ability to successfully navigate an incredibly complex technological roadmap, execute their business plan, and somehow translate that immense potential into tangible commercial reality.
And they have to do it before time or money runs out.
Yeah, exactly. They have to achieve all that before they either burn through that substantial cash runway or before competitors achieve decisive technical or market leadership. It's a race against time and technology.
What are the absolute key things someone interested in this company should be laser focused on watching going forward?
The sources really emphasize monitoring their progress on those critical technical milestones. Are they hitting their qubit counts on the roadmap? Are they actually improving system fidelity, reducing errors? Are they making real discernible progress towards fault tolerance? That's number one.
Technical progress. What else?
Also, watch the effectiveness of their strategic partnerships, especially that recent one with Quanta. Is it leading to real outcomes? And crucially, watch their ability to land significant commercial contracts, not just more R&D or government funding deals. Can they start generating real commercial revenue?
Commercial traction.
Yes. And always, always keep a very close eye on their cash burn rate relative to that $500 million cash reserve. How fast are they going through it?
Okay, makes sense. Let's circle all the way back to that hook from the very beginning, the extreme stock volatility, those huge swings up and down.
Yeah.
Why does Rigetti stock behave like that?
It really is the direct consequence of being exactly this kind of high-stakes bet on future potential. The market isn't valuing Rigetti based on today's fundamentals. The revenue's too small, the losses are too big. There's nothing solid to anchor it to in the present.
So it floats on sentiment.
It floats on constantly reevaluating probabilities. The market is perpetually trying to price in the likelihood of them achieving those massive game-changing technological breakthroughs way down the line and the potentially enormous value that could create, balancing that against the very real, very present challenges.
The losses, the hurdles.
Exactly. The scale of their current losses, the sheer difficulty of the R&D required, the intensity of the competition, any operational stumbles or delays like that Q1 revenue miss. Every piece of news, every perceived step forward or backward on their technical path, or even shifts in the broader quantum industry sentiment, triggers a significant recalculation of that future probability in the market's collective mind. And that leads directly to those extreme price swings we see.
So the volatility reflects the uncertainty.
Perfectly. The sources make it crystal clear why Rigetti commands such a high valuation relative to its current state. It is entirely built on future promise. But digging into those sources, understanding the scale of the current losses, the complexity of the R&D hurdles, the competitive pressure, it forces you to confront the fundamental questions. How long can that significant cash runway actually last if revenue doesn't start accelerating dramatically faster? And maybe more importantly, will they truly achieve the necessary groundbreaking technological milestones in time to capitalize on it all?
That really is the core question, isn't it? Fascinating stuff. Thank you again for providing the source materials that made this deep dive possible. It's truly illuminating to see the picture that emerges when you distill the information directly like this.
You're welcome. It's a complex story.
It certainly is. Again, if you found this analysis useful, please do like this deep dive and subscribe to the Stock Analytics AI YouTube channel. And remember, becoming a member for just €499 a month lets you submit ticker requests for prioritized deep dives and gives you access to detailed earnings call analysis.
And just a final important note, this analysis was generated based on the source materials you provided to us. It may contain AI-generated content as part of that synthesis process. We've worked hard to extract and accurately represent the key points from the information given. But it is absolutely crucial that you conduct your own thorough research and verify any information independently. Investing in emerging technology companies like Rigetti is inherently very risky. It can involve the potential loss of your entire investment. Always, always consult with a qualified financial advisor before making any investment decisions.
Sound advice. Thanks for joining us for this deep dive into Rigetti Computing. We'll see you in the next one.